Shares of cement stocks rise as HSBC issues a bullish report. The brokerage sees increased consolidation and expects FY26 to be peak of capacity addition in the current cycle.
Textile stocks have gained on optimism over an Indo-US trade deal as American negotiators visit India to continue the trade talks.
Shares of NLC India rise as the company signs an MOU with Kabil to collaborate on global critical and strategic mineral projects. Management also tells CNBC-TV18 it has lined up a capex of 9,500 crore rupees in FY26.
Godfrey Phillips has surged close to 9%. The stock is trading ex-bonus today, and this is adjusting for 2 bonus shares issued for every 1 share held by shareholders.
And a number of stocks also surging on order wins. NCC secures an order worth a little over 2,000 crore rupees. Mishra Dhatu Nigam, Transrail Lighting, Sanghvi Movers are also moving on the back of order wins. Hello, good morning. You've tuned into Chartbusters, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. With me is Hormaz Patakia. Hormaz, good morning. And today we're seeing again that green coming back on the screen, 25,150 above that mark. The Nifty is managing to hold on to that. Not much of a complaint coming in because last week was an interesting week. Yesterday, a bit of a consolidation, a bit of a correction, which is what we merit to, right? I mean, it's okay. There are ups and downs, but it was not much of a down. But today we have come back up again.
2 good things that have happened. We need not to jinx it too early, but the fact that we have managed to cross 25,154, which is the August 21st swing high today. That's the first good thing that has happened. And the second one is banks are leading this up move. And it is the Nifty Bank. We've been speaking about that 55,000 level on the upside for the Nifty Bank. It has not only managed to cross that, it has briefly crossed 55,100 as well on the upside. It will be important to see whether both of these levels sustain the 21st August swing high and that 55,000 level on the Nifty Bank, because the Nifty Bank has not closed above that 55,000 mark since the 25th of August. So it is an important level for the index to defend. And we're seeing some bit of resistance at higher levels. But of course, not to mention that today is, of course, also the weekly expiry of the Nifty contracts. So keep that on your radar as well. The broader markets, well, as of now, the index taking center stage, the broader markets have taken a bit of a back seat, but can't take away from the fact that the mid-cap index is also at the day's high. It's up almost 200 points, and stock-specific activity continues unabated. But it's a good time to get in a quick chart check as well. Dharmesh Shah of ICICI Securities is joining in to do just that. Dharmesh, good morning. Thank you for joining in. We managed to cross that important 25,154 on the upside for the Nifty. Do you see that sustaining one? If that sustains, where does the index head to? Your call on the Nifty, your call on the Nifty Bank, and your stock-specific recommendations for the morning as well.
So good morning, and definitely I think the week started on a very positive note. And if you look at the weekly chart of the Nifty, I think so far, higher top, higher bottom formation, I think so that is something the first sign of revival in the upward momentum. Yes, definitely we managed to cross about 25,100, 150, which was acting as a major resistance. We expect, I think so, the market to head towards 25,500 is likely target for the Nifty, because if you look at the market breadth, I think so that is the main indicator to understand the market, where we have seen a major improvement in terms of percentage of stocks trading above 50-day moving average, where the last week it was around 25%. Today, this week, it is around 58%. So massive improvement in the market breadth supported by, I think so, if you look at the 20-day moving average, crossing the 50-day exponential moving average, I think so. That is again the first sign of a revival in upward momentum. So overall, I think so the mood looks more positive going forward, and we expect, I think so, Nifty to head towards 25,500 with a strong support placed at 24,700. So buy the dip should be the strategy going forward in the Nifty. As far as Bank Nifty is concerned, definitely I think so the Bank Nifty, which was been silent for a long time, I would say it's been consolidating in this range of 54,500 to 53,500, has finally managed to cross above 54,500. We expect Bank Nifty to head towards 55,800 to 56,000 in the coming days, because if you look at the technical setup of each of this Nifty Bank Nifty constituents, like either talk for Kotak, Axis, or even HDFC Bank, it looks like they are ready for 5 to 6% upside from the current levels. So buy the dip should be also the strategy for the Bank Nifty with strong support placed at 54,500. As far as stocks are concerned, yes, definitely we believe, I think so, capital goods as a sector which has not in limelight for a long time should be back in action, where the index itself has corrected 11% from the top. We believe, I think so, the way that things are panning out for capital goods looks positive. L&T remains to be a top pick, where L&T we expect the target of around 4,000, keeping a stop loss of 3,344. Strong support, if you look at the risk reward, I think so for L&T looks more favorable at the current market price. So L&T is remain to be a top pick at the current market price.
Okay, L&T is your top pick, and capital market side, that's what you're looking at. Capital good side, that's what you're looking at as well.
Yeah.
Yes. So, when you're talking about, Dharmesh, overall in terms of a move, we've not seen IT also do anything, right, previously. Now, in this last couple of weeks, we've seen IT pick up pace. And I want to talk about one of these companies that is surging today, like 12-13% gains coming for Redington, strong volumes. By chance, you have any thoughts on the charts? Have you looked at Redington? And your thoughts on Nifty IT as well?
Overall, I think so. IT space looks, I think so. The risk reward looks more favorable at the current market price. Yes, definitely. I think so. Fed meeting will have a major impact going forward in terms of rate cuts and also in terms of any positive outcome in terms of US tariff. I think so. Should be positive for IT. So yeah, definitely. I think so. IT looks like the risk reward looks more favorable at the current market price, but definitely we stick to, I think so, the large caps like TCS, Wipro, or Infosys at the current market price looks more favorable. Inside the mid caps, yes, definitely latent to be something which we like at the current market price, where we are expecting 10 to 15% upside from the current market price.
Okay, Dharmesh, thank you so much for joining us this morning, giving us a view and insight in terms of, the Nifty Bank, individual stocks as well. Thanks so much for joining us for that. But let's shift focus now to our special segment where we will get you a few ideas of profit from Money Control Pro. Jitendra Gupta, who of moneycontrol.com, joins us to talk to us about the stock that he's been tracking closely. Jitendra.
Hi, thanks. I believe Bharat Electronics offer a good opportunity at current levels. The stock has potential to re-rate, supported by strong earnings visibility, healthy order inflows, and expected pickup in business performance from the second quarter of the current fiscal. The company's robust order book of almost 75,000 crore, which is 3 times its annual revenue, provides significant comfort at current levels. Major projects includes LRSM, Himshakti electronic warfare system, Akash missile systems, as well as key radar and communication programs. BL also expects emergency procurement orders and continues to build a strong long-term growth pipeline, expecting more orders from the Ministry of Defence. For FY26, the management is targeting revenue growth of almost 17%, driven by expected 27,000 crore of fresh orders. It also expects the margins to remain healthy at around 27%. Investment plans include 1,800 crore of R&D and 1,000 crore of capex. Alongside, the company is also expecting more orders from the exports and targeting to double its revenue from the exports over the next 5 years. Overall, BEL remains a solid play on India's defense growth story, and its stock is trading at around 33 times FY28 estimated earnings, which is reasonable given the earnings visibility.
We'll take a short break. On this note, the Nifty still at 25,170, still above that August 21st swing high. More on the markets and specific stocks on the other side. Stay tuned.
Welcome back to Chartbusters on CNBC-TV18. As of now, Nifty managing to hold on to 25,160 level. So keep an eye on that. Almost near the day's highest point is what the Nifty is trading at. We have a lot of movers that have come in trade, especially in the last 1 hour or so. Redington, transformers and rectifiers, Mahanagar Gas, these have seen a bit more of an up move, specifically in the last 1 hour. But we have cement stocks. That's also in focus. They were also buzzing in trade today, and because we have a bullish note that's coming from HSBC. Sudarshan is here to give us the details on the note. Good morning, Sudarshan.
Good morning, Vinny. So cement sector continues to see consolidation, and HSBC says that in the last few months or say in the last 1 or 2 years, the consolidation has only increased, and with now top 4 companies holding market share of almost 57%. It believes that leverage at smaller companies is positive for pricing, and also it sees FY26 as peak of capacity additions in the current cycle, and that might be positive for the sector. It has maintained buy call on Ultratech, and it's the preferred pick. Increased target price of to 15,410 per share. Upgraded Ambuja Cements to buy, and here target is raised to 700. Upgraded Shri Cement to hold, and target is increased to rupees 32,200, and maintains buy call on Dalmia Bharat, and target here is increased to rupees 2,900.
Interesting there, Sudarshan. Cement stocks, some of them getting an upgrade, some of them getting a raise to their price targets by as much as 45%. Some of them still holding on to gains of around 0.5% to 1% are most of these cement names. But a lot of other names are also moving. At least 5 companies yesterday had announced order wins, be it NCC, Midani, Adani Enterprises. So tell us about all of that. Vivek is joining in with all those details. Vivek.
Well, that's right. Quite a few stocks on the radar on the back of order wins, news flows coming yesterday, largely from the infra, the capital goods pack. First on the list has to be NCC, a pretty large order win of almost 2,100 crore, you could call that. This is coming from the Bihar government, order for a construction of the Barner Reservoir. Construction period of 30 months. Remember, console order book of NCC now stands well in excess of 70,000 crore. Mishra Dhatu Nigam, or Midani as it's more popular known, not too many details there, but the company says they've received an order of almost 136 crore. So now the open order book position of Midani stands over 1,980 crore. Translate Lighting, again, this particular company, infra player, as far as the power EPC space is concerned, they announced new order wins of almost 421 crore yesterday. Now, interestingly, this particular order win also includes a large transmission line. This is from a newer geography or a newer country in Africa. FY26 order inflows have now crossed 3,500 crore. And lastly, Sangvi Movers, again, 292 crore order win from an independent power producer. This is a particular order is for an order for a wind BOP, or balance of plant, and the order to commence from Q2 FY26 to end in Q1 FY27.
Okay, Vivek, thank you so much for that. But now let's go across to Nimesh, who's here to tell us the standout brokerage report for today. Nimesh, good morning. So which is that important report that we all should keep an eye out on today?
Hi, Vinny. So today's standout was in logistics sector, a big initiating report from JP Morgan, and they actually believe that they actually have a preference towards the B2B, B2C e-commerce as well as the oil and gas segment. So their top bets are delivery as well as Aegis Logistics. And they believe that the India B2C e-com business is actually going to outpace the overall industry with a 16% CAGR up to FY30. Now, coming to individual names, the first stock is delivery, overweight stance with a target price of 575. And they are focusing a 58% EBITDA CAGR between FY25 to FY28. So that's a big earnings upgrade there. The second name is Aegis Logistics. Even there, they have an overweight stance, target price of 895, and they believe for Aegis Logistics, the company's expansion plans, entry barriers, strong tie-ups, and high ROC would mean that the re-rating is going to continue for this particular stock. The other name is TCI Express. There they have a neutral rating and a target price of 750. For TCI, while they believe that the worst is behind, they believe that the structural changes in the industry would mean that EPS growth will be at risk. So that's the reason why they have a neutral rating. And the last is Concor. They have resumed coverage on the stock, again with a neutral rating, and a target price of 590. For Concor, while the stock has rallied recently, the earnings are not been supportive, but the risk reward seems to be favorable at this price. So that's the reason why they've resumed with a neutral rating. But the big call they have in that logistics space is a big bet, overweight on delivery as well as in Aegis Logistics.
Absolutely, Nimesh. Thank you so much for that. And look at Aegis Logistics also managing to hold on to very strong gains in today's trading session. Delivery is also trading with a green coming in of almost 1% of gain for delivery as well. So keep an eye out on that. Thank you so much for that. That was the standout brokerage for today. On that note, let's sip into a very short break. We'll get you more on the markets and stock-specific action on the other side as well.
Welcome back. We are back at that 25,154 level on the index. It still continues to be that pair resistance point as of now for the Nifty at 25,160 now is where the index currently stands. But on to the latest from the India-US trade talks front. India is set to hold talks with the US chief negotiator Brendan Lynch today in New Delhi. Lynch arrives for a day-long visit as part of the ongoing trade negotiations between the two countries. Meanwhile, Donald Trump's top trade advisor Peter Navarro also maintained his rhetoric on India and reacted to the SEO summit in China, where Prime Minister Modi met Chinese President Xi Jinping and Russia's President Vladimir Putin. Listen in.
Prime Minister Modi sent out a very conciliatory, nice, constructive tweet, whatever they do in India, and President Trump responded to that. We'll see that. This is how this works, but as a practical matter, we know that on the trade side, they have the highest tariffs of any major country. They have very high non-tariff barriers. We had to deal with that like we're dealing with every other country that does that. They use that money to buy Russian oil, and then the Russians use that to buy weapons, and then we as taxpayers have to pay more for the defense of Ukraine. And so how can that be? And watching Modi on a stage with China, which has been its longtime existential threat, and Putin, that was an interesting stretch.
Let us also now get you some views of Manish Chokhani of Enam Holdings, who expects the final US tariff on India to be around 20%. He's also a little cautious on the Indian markets. Listen to what he had to say.
What's happened with US and India was a surprise to everyone, I think, including to the protagonists over here.
Yeah.
Something changed during Sindoor.
Yeah.
And then I'm guessing something's changed over the last 1 week again to bring things back to what looks like even keel. But yeah, I mean, if you zoom back in a larger context, India and US have been the two best performing markets in the world, the best democracies and the best sort of places for capitalism to thrive. Even if you get to the 15 which the allies have, which is Japan, Korea, UK, I don't think we get to 15. But if you're at 25 and you have some way around that, let's see, maybe we end up at 20. This market was being driven or is being driven really by price agnostic domestic flows. There are opportunities in the market, but overall it's a market which is very optimistic. Like I said, strategics are out. FDI investors are out, PE investors are out, a lot of Indian promoters have sold their stakes down. And the market's being held by price-agnostic retail flows. And if a mood changes a bit over there, and I hope it doesn't, then we are in then you have to wait for the next cycle where you have similar optimism, which may be 3 years, 4 years later.
And US and China reach a framework agreement on TikTok. Treasury Secretary Bessent says that Trump and Chinese President Xi will hold a call on Friday. Former US Secretary Carlos believes that a deal will not be finalized in the next 2 weeks, but says that TikTok deal provides momentum to the extended deadline and extending the deadline. Listen to what he had to say.
China understands that rare earths are very important for the U.S., especially now when they have so much dominance. So they're leveraging that in the negotiations. They're pushing it as hard as they can, and what they want is for loosened export controls. Now, I don't think a deal would be reached in the next couple of weeks, but TikTok has been the savior of these talks, and it could well be that an agreement on TikTok gives justification to both sides to extend the November 10 deadline out another 90 days. So that's why so much focus is TikTok. And right now, that seems to be the light at the end of the tunnel in terms of these talks right now in Madrid.
And shifting focus to the important Federal Reserve meet, the two-day meet begins today, and CNBC's Steve Leisman brings us the details on what's at stake for Jerome Powell and the central bank.
There's a lot for those eyes to be looking at with a little Fed meeting mayhem. Just under 18 hours to go before the Fed begins its two-day meeting. Unclear how many voters will be there, relative confidence, however, in how the voters will vote. Here's what's in play right now. The administration asked for an appeals court to overturn the Cook injunction against her firing by the president sometime by today, so we're watching the docket. The Senate's supposed to vote on the nomination of CEA Chair Stephen Myron, so we're watching the Senate. Cloture vote is supposed to happen at 5:30, full vote at 8 o'clock. So there could be 10, could be 11, could be 12 voters at the Fed meeting tomorrow. We don't know. May not know till late tonight. Beyond personnel, the Fed has to deal with economic issues, inflation running above the 2% target, unemployment ticking up, and they have to find a compromise between hawks and doves, both worried about different sides of the mandate there. The futures market, not troubled by either the personnel or the economic issues. They overwhelmingly are priced for 3 cuts this year, 1 at each of the remaining 3 meetings. If Myron is approved, there will be considerable speculation about what you might call the Myron dot. President Trump was complaining that the funds rate 300 basis points too high. No Fed official has a future dot anywhere near that. We'll see where Myron comes in. He remains, however, the chair of the President's Council of Economic Advisors on unpaid leave of absence. So it remains to be seen if we forecast deep rate cuts, that could drive down the average rate that the market focuses on, but for the outlook for the Committee for Rates. Now, we could have dissents, Dom, in favor of a cut bigger than 25, and even a dissent for no cut at all.
All eyes on the Fed policy. But with that, we call time on this edition of Chartbusters. The Nifty is back to where the bulls were not wanting it to be, at that swing high of 25,154. The broader markets, though, continuing to do well, and the Nifty Bank, too, holding on to gains of around 200 points. So nothing to complain about yet for the bulls. It's still a long day to go. It's the weekly expiry of the NSE contracts. So from Winnie and me, thank you so much for watching. Trading Hour on the other side. Stay tuned.